Herald Van Der Linde, Head of Equity Strategy of Asia Pacific at HSBC, joining us this morning. Herald, always a pleasure to speak with you, and thank you so much for your time here at NDTV Profit. Let me start. Absolutely. Let me start right at the outset with your latest report and your view on FI flows when it comes to India. India is underweight in a lot of portfolios right now. Do you see that trend changing or remaining tentative considering everything that's happening geopolitically?
Maybe a little bit tentative, but there's a lot of things that work well in the right direction for India. It is not as exposed to the tariff sort of tussle that is going on as some of the other markets. It's considered to be a large and domestic market. The valuations look much more attractive. That was a real issue why, say, 2 years ago, foreigners started to reduce exposure to that market. If there's one thing that maybe is a bit of a question mark is what sort of earnings growth are we going to have this year? And I suspect it might actually end up below 10% or so. Numbers have come down, but we just don't know. We have to get a little bit of a grip on that. But for the rest, I think people like India, also globally, right? I mean, there is a weaker dollar. People want to diversify away from the US. Emerging markets looks really interesting into that. And India, of course, is a large, big domestic market with fantastic growth prospects for the medium and longer run.
Herald, it's interesting that when I look at this bevy of reports that have come in from you and your team in the month of May, there is this mention of inflows into Asia ex-China, Taiwan and India in particular, and interesting that India stands out in terms of flows, despite it being a large underweight, I believe, and you yourself, if I'm not wrong, went underweight India in the last couple of months, right?
Well, we were cautious on India about 12 months ago. We're currently neutral on India, and that is a bit of reflection of, hey, things are looking a little bit better for India valuation-wise. It's just that we just don't know what sort of growth we're going to get. So I wonder if that's going to be a little bit of an overhang for that market. But for a lot of foreign investors, if you're a global investor and you want to diversify away from the US, so you go to Europe, you go to Japan, and then you look at emerging markets. Of course, China is dominant in that particular universe, but then India pops up very quickly. And it is a large liquid market. You can easily get exposure. The domestic buying is healthy, so that keeps valuations a little bit afloat as well. That's good. And it's got kind of good growth prospects. So I think foreigners are coming back to India in that regard, gradually building back exposure.
Okay. So I know one of your notes states about how through the MF route and otherwise, the Indian retail investor, as per your assessment, has been a net seller for 3 months on a trot. My question largely is, as a broad sense, because of either the systematic investment plans or otherwise, the last few years, the Indian retail investor has been right up there. Assuming that what you've seen in the last 3 months is not a directional move, but a flash in the pan, would Indian valuations find support because of, one, the tape from the retail guy in India, and two, that growth in India is holding out in a growth scarce world?
Yeah. So what we see in other markets where domestic buying is fairly strong, I'm thinking about Malaysia. They got a sort of strong pension system, but also Chile, for example. What you see in those markets, that markets are less volatile, they're more stable, and they tend to trade at higher multiples as well. So a little bit higher PEs. And I think in India, we could maybe get something like that as well. You have good domestic buying. As you rightly say, this is SIP, but also non-SIP people just going straight into the market themselves as well. And although we've seen a little bit of, maybe people a little bit more careful over the last 3 months, this is sort of a structural issue. Across the region, actually, but in India, it's just very prominent. Indians are buying India, and that's a very good sort of development for a stock market. You've got domestic savings being channeled in the market. Companies that need money, for example, in the IPOs, hey, they can get that now. So you've got domestic savings being used to channel growth domestically as well. So I think that will continue. I think that might result in a sort of premium and less volatility in the Indian market as well.
Herald, in terms of geopolitical situation right now and what's happening with tariffs, just wanted to get your sense of how concerning are the new set of steel tariffs that Trump has announced, or what has been said about the deal with China, because that was a big, up move, that things seem to be resolved. Do you think that the tariff turbulence is something which we will have to get used to going forward?
So yes, but I'm going to add something to that. But yes, we need to get used to the tariff new paradigm, the new world reality. Not only that, there is an increased antagonism between China and the US. That's pretty clear now. What we've seen, tariffs started, what is it now, almost 10 years ago. We've seen that the US has limited the opportunities or is scrutinizing opportunities for Chinese companies to list their shares in the US and making use of the US capital markets. We've now also seen sort of rules or comments with regards to education of students there. So that increased antagonism, that will continue. That's simply a geopolitical reality probably for the rest of our lifetimes. However, there's also something else important. So the tariffs get a lot of attention for obvious reasons, but I think there's also something that is not in the news because that has not been announced. The US, after putting the tariffs in place on what is on April the 2nd, what they could have done is to say, anybody who wants to invest in China, well, we're going to make it very easy. You got tax breaks if you invest in all the key technologies that will determine the rest of our lifetimes. I'm talking about robotics, I'm talking about AI, I'm talking about renewables, I'm talking about all sorts of other things, EVs. They have not done so. And that means that actually in a lot of these industries where China is really catching up in AI, I'd say it's maybe 9 months behind the US, maybe even less. In EVs, it's probably 9 months ahead of where the US is. So in a lot of these industries, it's going to be more of a kind of a level playing field. They have not done so much to push back on that front. And that is good for China and some of the other Asian companies that benefit from that as well. They can continue to grow and become very dominant players in those industries.
So in the Indian perspective, Herald, what are the spaces that you're sort of liking right now? Because there are enough stories which are cushioned relatively from any kind of tariff turbulence, which are domestic, which are inward facing. And like you said, domestic investors is the big cushion we have.
That's right. So I'd say the areas where I'd like to look at and where I always think is actually most of the excitement in India is really on the domestic consumption front. That also includes the banks, maybe a bit of infrastructure as well, but depends a bit on the government spending. But I'd say, so we've had a shift from urban consumption towards rural consumption. I think that's interesting to look at, the rural side. I think also the banks, I mean, they're large, they're liquid, they're not overly expensive, much cheaper than the rest of the market. And some of these banks will continue to see quite decent sort of growth coming forward over the next couple of years because the market shares are still quite low. Private banks continue to gain market share over the longer run over the public banks. So that's for something I would like to be positioned as well.
Herald, what changes this outlook? I mean, there are a few moving parts. Geopolitics at the margin just worsening a bit. Saudi Arabia is now becoming the de facto or recapturing the de facto owner OPEC plus, and despite all of that and despite the upticks, prices out there, crude prices are rising. What changes the outlook on equities at the margin? Is it geopolitics? Is it commodities? Is it China growth? What?
I think there's 2 or 3 things that can change it on the margin. Yes, you're right, geopolitics, but to be very frank, anybody still surprised that there are tariffs being imposed on countries like India or China needs to really go and read newspapers. So that's not really news. So I'm not overly worried on that particular front. If anything, probably these things are going to settle at some point in time, maybe at a lower rate. The earnings is something. There is a feeling that structurally growth in earnings growth in India was really good over the last couple of years, and then it will have to settle at a much lower level. Most people think it's probably 12 to 15%, but it looks like it's going to be lower than that. So there might be a bit more surprises on that front coming through. And of course, the performance of China. If we see China coming back, that means that it will suck in a lot of capital that is flushing around the region. And that could impact other markets as well. But I think that's nothing that India can really do about. That's just the reality as it is. And I actually believe that people should have both India and China in their portfolios. China and India are sort of different sort of growth stories, very almost complementary, I would say. India is a long-term story of building out the country and creating access within the country, domestic market. China is really a story of, that has happened in China already, of Chinese companies going outside of China and growing in ASEAN or in Latin America, the Gulf, these sort of places. So I actually see them almost as complementary. But yes, it is true, if China recovers, a lot of money will get sucked out of Korea, Taiwan, but also India in order to finance purchases there.
Thank you so much, Herald. Always a pleasure speaking with you and having you here with us
Likewise.
on NDTV Profit.